Ay, 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 ay. Guys, I hope you can hear me. I think you heard me all the time. Very likely I breathed very heavily because, guys, as you can see, actually I'm on a truck spot and or truck stop. Oh yeah, you see it even in the background, trucker stop. I'm not even lying, guys. And currently on a road trip in my home region. So yeah, just make a quick step, recharge the battery of the car, recharge my battery, and hopefully recharge the battery of all of us in terms of grab holding. And before I forget it, aloha, lads and gents, welcome back to a new episode of Crunch Time. Ay, 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 ay. Very happy to have you in, guys. Even though if it's definitely not prime time, I mean in Germany at least, it's 11:30 a.m. Yeah, so quite early, even before lunchtime, and I guess maybe some Asian people will join, but Asian natives, but I don't expect too much US Americans, Latin Americans, Europeans. However, I give always my best, and I will do this and try to achieve this target as well during this session. And of course, there's always the chance that later on you check out the video or someone else, and therefore, yeah, makes perfect sense to try my best. Guys, I just opened and prepared everything. I just arrived, so I am not prepared by the best, but however, as you know, the fortunate thing is that I finalized the AAA Plus grab analyzers just a few weeks ago, separated in 3 parts, uploaded it, and so far I'm very happy with the feedback, so thank you very much. Before we jump in, I will repeat a little bit some information about grab to those of you who are new to grab, who are new to a Sense of Capital, to this YouTube channel. Again, my name is Julian, and just a quick disclaimer before we start with the actual content. What you will receive in the upcoming minutes, what will get communicated by me, is no financial advice, consultation, or whatsoever, and there is no guarantee of the correctness of the provided data. Whew. So far, so good. I'm actually quite happy so far with the stream, considering that I didn't sleep so well, and it's a busy day, but I don't want to complain. As you can see, I'm full of energy, and I'm very happy to have all of you in. Guys, I would say I shared the browser, and guys, please don't take it too bad if the order of the sheets is not so perfect right now, because again, as I mentioned, I just opened the setups and attached it here in the car and a little bit last minute. However, I think in 23 minutes the earnings result should be live, or should be live here. But it's my first grab call. It's my first Asian located company earnings stream. So those of you who remember the first new holding call, I will make a stream in the evening as well today at what is it? 3:50 p.m. Eastern time. 3:50 p.m. Eastern time. I will stream to new, but the first new stream I did a few months ago, was kind of a nightmare. I mean, of course, a little bit too strong, but it took, I think the stream was over 2 hours or something like this, because I was waiting for more than an hour at least for the release of the earnings results, because I was 1 hour too early, basically. And 1 or 2 of you guys, one of my first subscribers, they backed me, they guided me through this difficult period of my life, and basically, together we somehow lived through this experience. So somehow it was a negative, but at the end a very positive one, and no matter what will happen now, I'm very confident as well it will work out successfully. So no matter, here you will see the earnings results later on when they will get uploaded. One more update. Okay, nothing new so far. So what is Grab actually? So what you need to know is Grab basically is located in Southeast Asia, headquartered in Singapore, founded by 2 student colleagues from Harvard, and I think both are actually Malaysian people, but don't name me on this. And was founded roughly 2010, something like this. And what they are doing is they started with My Taxi, which was actually a mobility service app like Uber, for instance, yeah, like the legacy business of Uber, just transportation of single persons from A to B. Yeah, that's the legacy business as well from Grab, and then they basically somehow stepped into the footsteps of Uber. Yeah, so nowadays they have two core businesses. This is first what I've already mentioned, the mobility services. The second one is the delivery business, primarily food delivery, and then we have two secondary business, actually the upcoming rising stars. First is financial services, and the second one is I think they call it other enterprise services, but basically it's ads business, yeah, ads business. And they combine all the services and even other ones which are not so focused right now. Maybe they have potential in the future, but right now they are not. I don't need to point them out. But all of these services Grab is providing are combined in one single super app. Yeah. So the ultimate goal is like how is it called from Tencent, the app WeChat, is it correct? Or not 100% sure, but if you know, you know it. The super app in China from Tencent, which combines payment and chat function and this and that, and you can order stuff. So that's as well as the target of Grab, the ultimate target, yeah, to basically install with an app a single smartphone, a separate smartphone in your smartphone, so that you let's say in best case for Grab, you spend a lot of time in this app and you don't need to leave this app anymore. Yeah, so you have different functionalities, different applications in this app, different services which get combined and which make sure that you create a lot of commitment in terms of the super app Grab, and yeah, that's basically the target. And so you get a better idea how this looks. You can see it here. I hope you can see it. Let me check. Yeah. So that's the food delivery part. I mean, I can tell you, and I showed it as well in the Grab analysis. If I miss some information, guys, and you're later on interested, please reach out and check out the Grab analysis. I mean, there I talked about all the details, which I will now mention way more comprehensively. And now I just do it on a superficial level. But as you can see here, it's food delivery, it's document, package delivery, express delivery, mart, of course, so grocery and cosmetics, even food, whatever, for dogs, yeah, or for animals, for pets. Yeah, so that's basically the delivery service, which is the primary driver. Even if the transaction value, it's called GMV. GMV stands for gross merchandise value. So basically that's all the transactions which gets executed through the Grab app in terms of products and services. Yeah, it's in my terms way more important than revenue. Man, I don't like this location here. I don't want to tell that I'm shy. I don't think that you rate me as a shy person, but I don't like to be here so public and record this. Man, guys, sorry to you, and sorry for the other public people. I don't hope I record someone. Tried my best to hide it a little bit. However, so the GMV, gross merchandise value, so again the transaction volume of products and services through the Grab app is actually rising quite high on mobility services, so on the transportation business of humans. And in terms of delivery, it's more or less jammed. Yeah, it's quite constant, not raising too much anymore, single digit number. Not that great, let's say it like this. And then we have the third business part, which is the financial services. As you can see, it's basically payment services, wallet services. These financial services are nowadays separated in two parts, depending on the country, on the location where you are at. Basically, I mean, they are present in 8 countries. Let me check if I have here somewhere the presentation. Oh yeah. Oh, here we got it. Let me see if it's included right here somewhere. Here we got it. Oh man, I'm better prepared than I expected. So that's a little bit older. This presentation is 1.5 years old or something like this. But as you can see, I mean, it doesn't have changed too much. Yeah, in terms of regions, they are somehow limited. I need to be honest to you. So that's definitely. I mean, I don't expect they will expand too heavily in new regions. At least not on a natural, organic way. Maybe through M&A activities, but not through. I don't think through the organic, natural daily business. Yeah. However, as you can see, they are active in 8 countries, 8 Southeast Asian countries. And in these countries, they focus roughly 500 cities. Yeah, so the updated number is roughly 500 plus. That is what is going on here. And because we just talked already about the financials, we can check out the investor slide deck. The new one, I hope, will come in the upcoming months. But this is 1 year old roughly. But you can see here, that's the financial services actually. Yeah. So it's separated in the GrabFin business and Digibank. And GrabFin is more wallet and payment, PayPal-like business. Let's say it like this. And it's included very strongly into the other applications and into the super app. And then we have the Digibank, which is a digital bank. They have, I think, I'm not 100% sure, but I think they have in Malaysia and maybe in Singapore a full counting banking license. Now check this out by yourself, but I think that's the case. And so that's the classic banking business, let's say like this. So a lot of loan business. I mean, of course, here they provide loans as well, yeah, and money and whatsoever, and grant you leverage potential. But a Digibank, that's the real classic banking business. You can see here lending and saving accounts and maybe credit cards. Who knows? Yeah. So, and to go a little bit further, let me check. I actually made the note on which page. We need to go here, 80 and 98. So there we go. Nice. Yeah, they expect 2026 a break even in terms of the financial service, and they already, I think that's on 98. Let me check out if that's the case. Yeah, nice. Better prepared than I expected. So they already peaked in terms of expenditure, or at least they told last quarter, or this quarter actually, the earnings we're talking about today, they peaked in terms of expenses. And now targeting the break-even point in terms of the financial services. And then we have one more service which is not displayed so well here, and that's actually the ad services. Yeah. So the ad services is directed in terms of I can't find it right now, but the ad services is basically, let me check this out if I can find it like this. If I'm successful, yeah, that looks good. So here's an enterprise category. Of course, they make B2B and B2C. So, I mean, there are 3 stakeholders, primary stakeholders involved. First, the drivers and riders for the delivery business and for the mobility business. Then the second stakeholder type are the merchants, so restaurants, for instance, hotels, whatsoever, and companies as well. And then third one's the clients, yeah. As you can see here, they provide as well gift cards, for instance. But what I want to point out is here the ads, basically. Yeah. So online, offline. So for instance, you are a restaurant and you want that your food, your discounts, your offers, whatsoever, is getting displayed, higher prioritized, more upwards into the list when a client of Grab, a user, is looking for ordering food, for instance. Then this Grab ads business you can go for and purchase better locations in the app, for instance. So that's a great opportunity for doing extra money for Grab. And then we have something else, which is actually Grab Unlimited, which tries to create create loyalty, I think, in first and foremost. I mean, of course, you have a fixed income, but first of all, what is Grab Unlimited? It's basically the same like Prime for Amazon. Yeah. So I mean, there with this tool, they create as well a higher loyalty and somehow independentness. Dependentness basically. Yeah. So the customers are more highly affected and somehow addicted, maybe even, to the app, and because of this, they have lower fees in terms of ordering food or charging, hiring a Grab ride or whatsoever. And here they have even a daughter grocery store, I think in Malaysia if I'm correct, or Indonesia. However, and here as well they get some special conditions. Yeah, so all of this is what you get when you go as a customer of Grab for a Grab Unlimited account. I think they pay something like $1 to $5 per month, depending on the country. And yeah, when we talk depending on the country, let me please share to you the PowerPoint slide deck. Yes, even that is working out. I can't believe it. Let me check quickly if the stream is still working. I hope you can hear me, man. That's always the nightmare I have in my mind. That on a certain point I'm recording for hours and hours and nobody's watching. I think actually one is active in the stream. So if that's the case, please don't hesitate to just send a message in the chat. I will check this out later on. But very happy it's working actually. So guys, let's come back to the country. I want to tell you something about the region very quickly. Yeah. Wait, one more check to make sure I'm not missing the results. Yeah, okay, it looks fine. Maybe later we have time, we will see. But I try to rush a little bit, hope that's not too confusing. However, as you can see here, that's the region, of course, the continents of the globe. Yeah? And the population, and it's obvious, Asia, a lot of people, citizens, residentials living there. You know, the population is very high, with roughly 5 trillion. Trillion is correct, I hope so. Or billion? Trillion, I think, yeah. Billion. It's trillion. Wait, trillion is not correct, I think it's billion, yeah? So don't get me wrong, but billion. So with roughly 5 billion citizens in Asia. But that's not what I need to point out here. What is way more crucial, essential, and interesting for us in terms of Grab, in my perspective, is the density. Yeah? And as you can see, the density is at least 3 times higher than every other density. I mean, it surprised me a little bit that Africa has that high density. I didn't expect this, but maybe I'm not so educated. However, what is crazy is the density. And in Southeast Asia, in this part of Asia, the density is even higher. Yeah, you can see a lot of people living in India, in China. So actually not so many living in Southeast Asia, roughly 700 million, a little bit less. But the density is crazy. Yeah? And why this density is so crucial in my perspective, because when you think about Grab and the core business, food delivery, for instance, document delivery, you want to achieve network effects and synergies. Yeah, so when someone is ordering something, you hope that someone else in the same region or with the same targeted region is ordering simultaneously, so you can do stacking and batching, put together both orders, and yeah, create synergies basically. And I think because of this density, there's a huge potential. Yeah, as well on the merchant side. Yeah, I expect maybe the restaurants are smaller compared to Europe, compared to Germany, where I'm located at on average, but I think there are way more restaurants, yeah, and somehow they need to diversify from each to other. And on the other hand, there is a lot of potential that you drive somewhere, pick something up at this merchant, this restaurant or grocery store, and a few meters next to it there's another one where you might pick up something else. Yeah, so that's the reason why population density is so important in my perspective. Going a little bit deeper, when we talk about the population, just that you have seen it, what is crazy here is that Indonesia and Philippines are far ahead in terms of population, yeah. And as you can see, Singapore and Malaysia are very low, and that's a little bit ironically because Singapore and Malaysia are financially very, very strong. Let me check out. I prepared here as well something what I already shared with you in the analysis, and here you can see it. That's the average salary, net salary, in US dollars, I think. And as you can see, Singapore so far ahead with 4,500, then nothing, then Malaysia, then nothing, and then Thailand, yeah, and a lot of other stuff, yeah. So Singapore and Malaysia are small markets, but actually, they are very lucrative and efficient markets, yeah, on the monetary side, yeah. That's crazy, yeah. And in Indonesia is as well quite interesting because, okay, it's quite low, of course, compared to the top ones. But what you should not forget is, let's step back to the PowerPoint. Let me quickly close this one. So I try to. What you should not forget here, 260 million. So more than a third of the overall population are located in Indonesia. So. And that's the growth of the population, as you can see, is quite high, especially compared to countries like or continents like Europe. Yeah, so more and more people are living here, and there's definitely some potential in those markets. Yeah, these are the rising stars, and at the same time, there's a lot of democracy, I think, or at least by distance, I think there's more democracy than in some other countries. Not always. I mean, depending on your business case, whatever, I don't know how beneficial this can be or not, but I prefer a democracy and to own a company in a democratical country than in a not democratical country. Okay, and as you can see, Singapore, a very high density. Why? Because Singapore is basically a city country, a city state, and yeah, other cities as well will have a very high density. What I want to show you as well, last but not least, when we talk about the region, that the GDP is growing very, very strongly. Very, very strongly. I mean, as you can see here, 60% in the Philippines. Yeah, roughly 50% in Indonesia. Yeah? Singapore and Malaysia, the now very financially strong markets, are a little bit in the back, especially Singapore. But yeah, so in Indonesia is a huge market. It's a huge market in terms of density, in terms of population, and in terms of GDP and potential in GDP. And just to show you here something as well. Scan back. Oh, that's my face in large. Just one more thing. That's the major competitor in Indonesia. It's Gojek. And basically, when we check out the products, I hope it's correctly, yeah, it's very similar to, very close to, or even identical almost, to Grab. You can see here transport logistics, so basically mobility, payments, so the financial services, food and shopping, which is the food delivery business, and some other services. Yeah, so they offer even sometimes more service. I think some massage, for instance, whatever kind of stuff I read in the past. Not that important right now, but Gojek is a very strong competitor, basically, very strong, and has definitely potential. And for me, a crucial point is for Grab that Grab makes sure that the competition, they don't lose track to the competitor. Just very quickly, before the financial results get announced and publicated, they are not publicated yet. Very happy about this. I go quickly about the other slides I prepared, or the other websites I prepared. As you can see here, actually Grab received, I think as the first one, the Malaysian central bank license. It's crazy good sign. I mean, that shows that it's a very serious player. They have good connections, yeah. And so very interesting in my perspective. Earnings we come later to. Another aspect is, you can see it here when we talk about the markets. Let me check out if you can see this. Yeah, it looks good. Great. So that's, I think, that's the most current one. Let me see if this is working out for you. That's good. Perfect. Yeah, and as you can see here, that's the I think that's the is it correct? Yeah, the GMV. Yeah, the GMV. I think not the potential, but the actual GMV. Correct me if I'm wrong. So again, the gross merchandise value, so the transactions volume of products and services through the apps, for instance, and in terms of through the Grab app, and you can see they are everywhere leading the market. Yeah, especially in the financial strong market, Singapore, Malaysia, that's the case. In Indonesia, it's a head-to-head race. Let's say it like this. In food delivery now they are taking the lead, but in mobility, I think sometimes Gojek is in the front. And actually, the purple or the pink one, this is Food Panda. Yeah, it's a sub company, a subsidiary, a daughter of Food Delivery Hero company, which is actually located in Germany, and 100% focused on food business. And they try to sell this currently, and that's the reason why this article is existing here in German. Oh, my dog just made some noise. Sorry, so I don't want to annoy her, but I think I can't avoid it. So however, Delivery Hero is basically at the moment selling all the businesses in the countries, as far as I understand, which are not profitable. So they have quite strong market share, as you can see here, and they're selling those markets among some others, and somehow this was not so successful. Yeah, I'm not sure if we can see it here. Yeah, but this, yeah, so it collapses. Yeah, so somehow I think Food Panda or Delivery Hero asked for roughly $1 billion, and I think I heard something like Grab offered something like $200 to $400 million, because obviously it's not profitable, and they're already having the best position in the market. They're leading the market in a very monopolistical setup, and I don't think as well there is a need. I would love that they acquire it actually, but if there's antitrust issues later on, if the business is run bad or whatsoever, or they're confident they will somehow receiving anyway the shares of the market, then for me it's not that important. Yeah. Let me check out one more time. Okay, good. I hope they will stay late a little bit. Okay, and what was actually a little bit awkward, even right after this news was announced that Food Panda is not a current topic anymore, very likely, and they couldn't find a common level and acceptance of the price. This news was announced. So Gojek is a daughter company of GoTo. So they are in negotiations or conversations, let's say it like this. They have been in the past, and somehow how they could cooperate, or maybe Gojek gets purchased by Grab. Crazy stuff. So the news is not stopping, and crazy news. I think this news was not involved in the Grab analysis because it was too new. Oh man, the sun is shining, and yeah. However. And then what we got here as well, Investors Day, I already showed this, that's good. Then we have some earnings call stuff. Let me show you quickly the chart maybe. Yeah, it looks good, great. And let's go over all time. Yeah, and as you can see here, the original initial private offering the IPO took place. I'm not sure if it was a SPAC or not, but I don't think so. Otherwise it would look different, I guess. But however, it took place in, you can see here, December 2020. It peaked very early afterwards, roughly $14 and then a little bit up, down, volatile times. And like many other companies, especially digital rising stars, in November 2021, they reached their peak or reached quite high level and then dropped. Boom. And basically since, you can see it here, since 2022, mid of 2022, it's jumping a little bit, but it's more or less stable, yeah. And so nowadays it's 333, 38. Basically, I purchased the stock first time not that far ago, 2 months ago, end of December, 1.5 months actually, or no, it's 2 months, let's say 2 months. And now it's my smallest position, but not that small. It still have 10% of my portfolio, I think. And I think I'm owning roughly $9,000. Yeah, I can tell you what I like about this company. Let me check out quickly again. What I like about this company is the story. It's not a bargain. Oh, now it's live. Or no, it's not. Okay, hopefully it's not too late. If the results, I can't stand here too long today or in this car, and I need to do some stuff. That's the reason why I'm doing this road trip. So I hope it will get released not too late. Give me 10 or 15 more minutes maybe, but then I hope it really gets announced. And then, wait, let me check out if 5% up in advance, as you can see here, aftermarket. So this should work out now. Let me check. I mean, it inclined already a little bit in the past days. I would check out here as well. Maybe one more information to grab. I hope you can see my screen. One moment. That is what I don't want to show you actually. But what I want to show you quickly is they have an excellent, in my perspective at least, an excellent cash debt ratio. Yeah? So when you evaluate this company with the market cap, you will not be so happy, in my perspective. But in terms of cash debt, you can see it here is 1:5, 1:6. So the enterprise value is way, way lower. And it's great they have this financial power, and they are not limited somehow in their actions. Yeah, I think that's very important, especially in a business where a lot of competition is going on, and in this business there is a lot of competition going on. Here we have the revenue development of the past years. You can see the increase was not that high, but then from 2021 to 2022, bam, yeah, so 800,000, more than 100%. Crazy. And then again very strong 2022 till 2023, or at least expected 2023, quite strong, but only 700,000. Yeah, and now the forecast is just 500,000 more, roughly I think 20% year on year. Nothing which pushes me from the chair, like you would say it in German. German you would tell it, das haut mich nicht vom Hocker. Das haut mich nicht vom Hocker, würde man sagen. Das haut mich nicht vom Hocker, you would say. I can try to teach you a little bit German language. So it's not too crazy. Okay. It's not here, not right now, and not here. Okay, guys, let's go on. Oh man, I don't hope it will be a 1 hour plus session. I'm sorry, guys. Okay, but that's the revenue development. We talked about the cash debt ratio. Profit, guys, oh, nothing too crazy, nothing too good. As you can see here, we are definitely in the negative. What you can see here as well is, I mean, they make sure the revenue forecast is covered, and that's great. But the EPS, earnings per share side, is a little bit loose sometimes. And yeah, they somehow going closer to the break even of at least adjusted EBITDA base. But yeah, I think for me the company is a mixture basically. Yeah, I can show you here something as well in these terms. So I rate my positions always in revenue growth, revenue profit growth, and profit growth. So I always put or set on a growth. I always want to invest into a winner company, not in a loser which is just cheap. I always try to invest into a winner which is still making moves. Yeah, And so I rate Grab basically as a revenue profit growth run company. I mean, not everyone is sharing this opinion. I already received a comment which was a little bit different. That's just my opinion. I understand if you rate it more like a revenue growth company, but I mean, by themselves, they told, yeah, break even and this, and now we finally reached adjusted EBITDA neutral first quarter. This was last quarter actually, way earlier than they expected originally. So they developed great, yeah. And yeah, so I think what they communicate and that they want to make sure that in terms of high interest rates times, they want to make sure, I guess, that they make money basically and are financially stable, even if they have a good cash position, yeah, in the background. I think that they set a higher focus on profit, and how they communicate, I interpreted that it's a mixture, a blend out of revenue and profit. You can see here just a few cons and pros. Let's just talk about the major ones. So low GMV growth is definitely an aspect, especially on the food delivery side. There's potential left for sure. We will check this out later. And antitrust is definitely an aspect, and regulation frequent. I mean, they declined now the takeover of Foodpanda, but maybe if they're getting more and more market share, it can be an issue in the future. And pros, the major ones is definitely the positioning in the market and this combination with the super app, because to roll out a super app successfully, of course, synergies and network effects is the driver. And I think Grab is on a good way in this regard. And then, of course, we have the short-term and long-term potential. Didn't talk about it too much, but the short and long-term potential. Short-term is this acquisition, no matter if it's Gojek or Foodpanda or whatsoever. Then we have on the midterm, in my perspective, the secondary services, financial and ad business, which is getting better and better and creating momentum, which is positive, very positive. And on the long term, yeah, maybe I don't even know anymore. Maybe Grab Unlimited, yeah, as well. So, and new apps, new functionalities, even maybe expand to other markets or M&A activities. So I mean, a super app itself is basically the long-term story. Yeah, you don't need to add anymore in my perspective. So I check again the results. Not uploaded yet. Oh man, I think the story from a few months ago starts again. Oh man. Okay, however, I will go on, no doubt about this. So guys, then when we talk about evaluation, yeah, in my Grab analysis, I talked a little bit about this, but just to keep it as well very superficial, my companies I'm owning or the watch list I have in my backend, I always have basically 3 different major metrics. Yeah, I don't go too detailed in terms of calculation tool. I mean, for me, I figured out when I worked a little bit longer on a calculation tool, it's from my perspective, these kind of tools, Excel sheets, whatsoever, are a lot of times limited. You know, there are different sectors, a lot of soft aspects, or even quantitative aspects, number-driven aspects, which are hard to catch and evaluate and to put into a random mask. It's somehow limited. So I've decided to keep it very simple and easy to use and simple to understand, and just to have a starter. A rough categorization, is it cheap or expensive? And as you can see here, year-on-year sales based on expectations, expected 2023, 2024, growth sale is roughly 30%. That's okay. I rated higher than Grab itself. Grab stated as again, or the forecast officially are not Grab. The official forecasts are 20%. So I guess it's more like 30%. I hope at least. Then we have FEV sales ratio again on the 2023-2024 base, and it's 2.9. At least I think the data is 1 month old or something like this. So not too old. Didn't change too much, guys. The price earnings, same period, is -40, so that's definitely, you see, I need to scratch myself because that's definitely not that nice. that's not nice. So in terms of profit, they definitely need to improve, but as long as the growth is on a good path and the profit is developing in the right direction, it's fine for me. And then I sum it up in a so-called fair price multiplicator. So in those terms, I think it's currently actually 1.3 and not 0.4, not 1.4 anymore. But this doesn't mean that, for instance, a stock costs now $10, and if it's 1.4, it should cost $14. Yeah, fair price. That just means that it's a rough tendency, and for me, a company which has 1.5x is less worth than a company which, or less undervalued than a company which has 3x. Yeah, so that's the message, that's the story behind this. Yeah, and that's really not a bargain. Yeah, Grab is not a bargain. It's my most expensive stock actually, and it's my highest gambling story, and it's just story driven because I see the story behind it. I like the business. I like the market, this population density, GDP growth in the future, monopolistic setup. All this stuff is very difficult to catch this in numbers, yeah. But from my perspective, you know, when you are an investor and you have time and you like this, it's your hobby. Yeah, it's not my job. It's just I'm a guy who likes to invest time in this, maybe like you as well. And I'm a simple man in this regard, you know. I like to see nice stories, good numbers maybe. Sometimes both is combined. In this case, it's just very strong story driven. It is how it is. Nothing too negative, you know. And even if the valuation, I know where it's located, even if it's not that great, for me the story is covering it, balancing it out, and creating so much potential which might get digged by Grab in the future. Yeah, so that's the reason why I invested in it, and I don't think it's a strong short-term bet. Therefore, for this scenario, for this idea, it's valued, I think, in my terms, too high. With roughly three times revenue. Guys, the numbers are out. The numbers are out. Yeah, but where I can get them? What the? Guys, what's lost? I mean, on their website, the report is not available. Let me check quickly. So, guys, I will share my screen right afterwards. Yeah, it's very fresh, 1 minute ago, so I guess very soon the earnings will be announced, or the report will be available. However, let's go back, and I just finished this quickly, and you guys can see here just some other companies, some in the food delivery, some in some other industrial sectors, and some of them are higher rated, some lower, like PayPal or a direct competitor, more or less, even competitors a shareholder of Grab, and they are not present in the market anymore. But even though I don't rate it as a bargain and not too cheap, maybe some other would rate it cheap. Price is definitely not the reason why I invested in Grab. This is what I can tell you here. That's the end of the story. If you want to take a closer look, you can push the pause button later on, or check out the Grab analysis. There I add more information. And before we jump into the report, yeah, I make it now very, very quick. Yeah, for me today, where we are, wait, let me check out if I'm sharing the PowerPoint. Perfect. So what I want to see, and I already saw it actually, honestly, I wanted to see $660 million revenue, and I think they catch 653. Yeah, so a little bit lower, but higher than expected. Okay, and EPS neutral would be amazing. Yeah. That's the outlook. That's the outlook base. Okay. Which I just talked about the outlook. Okay, because yesterday I prepared it. Sorry for the confusion. So what I want to see in terms of the outlook, which is more important at the moment for me, like yesterday evening, Nvidia outlook was way more, in my terms, way more essential than the actual results. Just my perspective. And I think that's the same for Grab. Yeah? I mean, it's important that the revenue and profit is in line in terms of their expectations and the forecasts of the market. But more important is the outlook. In outlook, I want to see at least $660 million, and EPS neutral would be on an adjusted EBITDA base would be great. Then we have the short-term aspects, which we will check together today. So the GMV incline, especially food delivery, I already mentioned it. Then we have incentives and stock-based compensation. So you need to know that because of the competition, and so they're attracting the customers, the merchants to their app, and as well the drivers, they grant bonuses, incentives, yeah? Different kind of incentives, but incentives is a big driver in this business. And yeah, as I mentioned, Grab Unlimited, for instance, this prime version of Grab is somehow creating as well loyalty, and based on this kind of activities and strategical decisions, they higher the commitment even without this incentive. They higher the commitment to the stakeholders. And so, yeah, I hope they lower furthermore the incentives on a strong base, because they already started with this. As I mentioned, they try to reach profitability, I think, and I think they would lower the incentives if they would 100% focus on revenue growth, because then it would be irrational. Then we have stock-based compensation, or share-based compensation, how they call it in their documentation, and I can tell you that's quite high. It's simply quite high. I think it was $90 million in 2023, the third quarter, last quarter. Not great. So I hope they lower it, but incentives is more important and has a higher effect, way higher effect. Then we have monthly transactional users and GMV per monthly transactional user. So the total amount of active users should increase, and on the same time, the GMV per user should grow, of course. And then we have Grab Unlimited stats, but I'm not sure if they will state something now written. I guess maybe on request in the Q&A later on in the call, they will tell something about this. And which is not so important for today is mid and long-term base. You can see I already mentioned, I think I mentioned all of this. Of course, there's as well a China-Taiwan risk, but I'm not an expert in this. And guys, I think there are many out there which are way more skilled in this. I just focus the microeconomic side with a little bit macro, but this kind of stuff is too political and too large for me. But important to mention. Okay, guys. And last but not least, yeah. Let me share my Excel, which I prepared. So wait, you can't see it so well, so I need to add something here. Is it working like this? Yeah, it looks good. So I prepared a sheet, what I do a lot of times for these calls, to offer you extra value. Yeah, and you really go out, and I'm not just telling you, yeah, the price is increasing, it's green, now it's lower, now it's increasing when I do live stream to earnings. I don't like this as well. Even it's more simple, and maybe if you are not so skilled, it's simpler to hear it. The price is rising, the price is lower, and that's the whole live stream about the earnings call. I really want to show my insights, my opinions, and prepare something. And in these terms, I prepared here, as you can see, all the aspects which are important on the short-term base, which we will enter in a moment, and the results actually. Yeah. So here you can see what I expected for this results. So almost neutral on just covering the forecast in terms of EPS. And revenue-wise, I expect 655. So it's, I think, 653 what I've see already. So very close to this. And again, as I mentioned, outlook very important. 660 billion US dollars in terms of revenue, and EPS neutral. Neutrality. Who knows? Who knows if that's the right word or not? Okay. Guys, I would say it's time. It's simply time to start the rocket again. As I mentioned, it's for me not a short-term play. Yeah? It's more a long-term play. Share the screen. Hopefully it's now available, and I guess it will be. Yeah, it's available. One more time, you can already check right now. Yeah, what I've seen. Yeah, 653. So as you can see, it's not that strong beat. Yeah, I mean, look here. They beat 1 year ago by 100 million US dollar the forecast, and then by 30 million, and then it's getting a little bit more realistic and lower. So I don't think it's a bad beat with 20 million up, but the EPS is positive. That's fuego. I thought, guys, fuego. I will use this word later on at Nu. Who knows if Nu will perform so well. Nu is a little bit like for me Nvidia, as I mentioned. It can be always right in this direction or that direction. Very excited later on for the stream. But that's fuego. I can't state it differently. Yeah, that's strong. That's strong, guys. Two times green, that's strong. So let's see. Oh, but it's minus. Oh, that's not good. That's not good. Who knows? Maybe it's the outlook level. I already mentioned it. That outlook is counting way more than the actual results. But the actual results, I don't think it's because of this. Because look, guys, it's not that bad. Okay, let's jump into one moment. Let's check quickly if someone is watching right now. I still don't know how to integrate the chat into my recording live stream program. When I have a little bit more time, I will cover this. Yeah, one person is watching. Aloha. And okay, let's go back, guys. Now it's getting interesting. Now we need to figure out why it's the case that the price is dropping, and I can only imagine it's on the outlook base. Yeah, it's not that heavily, but so I don't. Yeah, we will see. I guess it's more than 660 million because it's quite low, but let's see. Maybe it's something different. Okay, here's the presentation. Let me see if you can see it. All right, here we go, guys. Abfahrt. Revenue. Okay, financial highlights. And I always use the presentation slide deck. I think it's just more attractive. When I have time and on the side, I'm not streaming, I check always the regular press release. But if a slide deck is available, I think it's always more attractive for viewers like you, yeah, and even for me, honestly, yeah. Okay, merchandise value year on year. Again, as I mentioned, revenue is not an important. GMV is way more important for me, and 18%. Yeah, I mean, food delivery will not be so beneficial. Maybe there's some headwind going on in the food delivery business. Maybe. Let's see if that's correct. But group adjusted EBITDA is. You can see 146, so let's say 150 million year on year. That's great. Oh, the dog is moving. Oh man, sorry dog, man. Guys, please don't call the WWF or whatever. I will right afterwards go out with her here, and she gets a snack and everything is fine. I mean, just before I jumped into the car, we had to walk. So what we have here: grab delivery options, standard, safer, priority. What's this? Okay. Priority deliveries have higher margins than standard deliveries. Yeah, cool. Okay, cool function, cool functionality. Look, guys, that's great that they offered something like this. And safe delivery, you can see here. Yeah, it has an effect on its batching. I love this. I love this kind of stuff. This large picture, resulting out of different pieces for this puzzle. And again, as well, that's a nuance, small color, which I appreciate about this company. Yeah. And on the other hand, priority is not getting accepted by the market so heavily, as far as I can see it. So yeah, but it's great. I can't evaluate it too heavily. I mean, I'm not hoping that they're losing too much money on the safer side. Just okay, they have batching effects, but yeah, $2 but I can imagine as well they get more competitive, or they are more competitive by this aspect. Yeah. So as well, nothing too negative. Yeah, I like this. I mean, there's a reason why they're displaying this here. Yeah, I like it very much. Never read about this in the past. So what we have here, Okay, so the number of drivers is increased, and I think the retention rate is something 90%. So those drivers are quite loyal. And for me, driver is the key driver. Is the key aspect. Let's say it like this. The biggest piece of the puzzle for success. Search rights. Enhance earning. You can see the earning slide deck is not too voluminous, so we will be through it quite quickly, I think. Don't worry, we'll not talk about these details too much. 14%. Yeah, that's great, because I mean, especially after pandemic times, I think pandemic times the food business was a gold mine. Yeah, as you have it very likely in your memory that that a lot of traffic was going on. People could not leave their houses, or restaurants are locked up, and now the drivers suffering compared to this past times and past periods. And it's great that even though incentives getting lower, and even though batching goes up, the drivers earning more money. Yeah, that's important as well. I mean, drivers need to be happy. They are the face of the company, or the riders. They are standing in front of the clients, of the users. It's important that they are behaving well, I think, and they are satisfied and paid well, even if money is not everything. Okay, loan dispersed, I think it's very close actually to, you can see here, that's the last earning. Oh, it's even higher. Okay, nice. Okay, it's year on year, 57%. But still, yeah. Okay, as you can see, 50% more. Yeah, it was roughly 1 billion, if I'm correctly, 1 quarter ago, and now it's 1.5 billion. Not that bad. That sounds great. And now the banking business gets more focused, because I just go one time through the old one. Banking business was just one standard slide here, and now they put the headlight, the spotlight on it. And as you can see here, like with digibanks, okay, loan dispersed group. Yeah, immediately 200 plus. You need to know that I've read something like 70% of the population in Southeast Asia is unbanked or underbanked. Yeah, so it's a little bit similar to StoneCo or Nubank in Latin America, where as well people are on average quite young, and a huge amount of the population is underbanked or unbanked. People are waiting for this. They are hungry and thirsty, and as soon as this kind of services are getting announced, and of course there are competitors like C with C Money, C Limited with C Money, but there's potential for sure, man. And I love that they're stating this. You can see GXS Bank, Singapore GX Bank, Malaysia. So obviously they have the license, they're rolling it out, everything is working as planned, and I think that's definitely some extraordinary potential, and I'm very happy to read this, no matter, even if the market is not that happy so far, but we will see. We'll come to the point that we understand why the market is not so happy. As I mentioned, I guess it's the outlook, maybe the GMV growth and food delivery, but I guess it's the outlook. What do we have here? Okay. Now it's getting serious. Okay, it's a larger growth than I can compare this to the older one. You can see here. Here's GMV metric, and it was 5% year on year, and actually it's now 9% year on year. We will see what's the reason for this. The users, they grew as well, 12% year on year, and here 7%. Amazing results. Sorry, I don't want to lie. I don't want to tell any fairy tales, but I don't need to actually, because growth is great. 37, 38 doesn't look bad for me. Yeah, MTU is growing. Okay, I think now it's getting a little bit more, let's say, dirty. So the GMV per user, so the transaction volume, 144, and I think it was less. Yeah, 148. Yeah, who knows if you offer the saver options, what we have seen earlier, if you offer Grab Unlimited, this kind of stuff, it's not without a reason why the GMV per user is decreased. Doesn't surprises me actually. But of course, nothing what you want to see as an investor. Yeah, your alarm lights already shining and flashing a little bit, maybe very slightly, but they start to flash. Yeah. Okay. So now we go a little bit. Oh wait, that's the wrong one. So we get a little bit further. For me, I just want to push the quarters. I don't want to focus too much year on year. It's interesting, but I always focus more quarter on quarter if it's available. So prefer this. Yeah, I mean that they reached a positive adjusted EBITDA, not only segment but as well group is great. Oh man, it's getting very cold here. What's going on? The car's not charging anymore. Oh. However, the show must go on, I guess. Yeah, the car's actually really not charging anymore. Damn! Oh, wait, I just checked my smartphone and I can see, shout out to infamous Nikon. Nice one? No, Nikon. Thank you very much for subscription, man. I highly appreciate it, and I guess you are currently watching, and so the reason why you subscribed is that you like the stream so far, and I hope you are satisfied, man. I hope you will maybe even join later on the new call. Great to have you in, colleague. So let's go on. Net cash, I don't have any doubt that this looks bad, and as you can see, it's quite stable and nothing to need to talk about. Now it's getting interesting. Deliveries, okay, you can see at first glance, I don't take too much focus on revenue. Yeah, revenue is interesting whatsoever, but for me it's important the GMV, and you can see here it's 13%, and it was I think 5% or 7% last quarter. Yeah, so that looks good for me. Even if the total amount is not that high, there are very likely some seasonal effects why Q4 is not that high, based on the history, but looks good for me. Yeah, and you can see, the EBITDA, I think, it's increasing. Yeah, it's very low based on GMV, but it's just GMV. I think without GMV it's something 20 or 30%. So based on revenue, but on GMV it seems very, very low. But as you can see, turnover, the profit is increasing and working to the right directions. Okay, for me, food delivery, we can tickle this box and looks good for me. So now we have mobility, 28% is a little bit less than last year. Here we can see it 30%, not an issue at all. As my perspective at least. The margin is getting a little bit lower, maybe because of incentives of these bonuses. We will figure out later. But it's really just 2 million up. Yeah, maybe Q4 seasonal effects not that nice, but who am I? I don't know. Financial service, now I expect something, or at least a little bit. Yeah, okay. I mean, revenue-wise, TPV wise, so TPV is basically, you can see it here, is basically the same or more or less dependent, the KPI, the similar KPI to GMV, just in the financial sector, let's say it like this, and still losing a lot of money, even more than last quarter. But as I mentioned, the management stated that Q4 2023 will be the peak event in terms of expenditure. So from next quarter on, I expect less loss. Okay, it's stable at -5%. It is how it is. Let's go on and dig deeper. I want to figure out what is the case, what is going on. Ads business, So it's called Enterprise and New Initiatives, but as far as I understand, it's primarily ads business, and that looks very good in my opinion. That looks very, very good. Revenue wise, GMV wise, the margin is increasing. It's I mean, it's not pure revenue equals profit, or adjusted EBITDA, but it's quite high margin business. Yeah, as you can see, 50% of the GMV, and I really like this ads business, even if I think it's limited. I mean, when you have a super app, you can only announce a limited of promotion or add promotion to your app. Otherwise, it's getting not usable anymore. And yeah. Okay, let's go on incentives. Incentives, very interesting sheet, very important sheet. So, what we got here, total incentives is mobility is increasing. This is what you can see here. 30 million up roughly, and that's the reason very likely why the adjusted EBITDA margin is negative, decreasing a little bit in the mobility sector. Because of the incentives. Makes sense. It's fine. Financial service, as you can see, very, very low. They ramped up the business, decreasing it very heavily compared, even if it was not that high in terms of the TPV, getting lower and lower, like this very much. Ads business getting slightly lower, not too great actually, so I guess they want to receive more growth. But on the other hand, as you can see, ads business is still very, very profitable and lucrative because they have the app. They don't need to have any human resource costs or whatever. They just receive the offerings for the ad spaces, for the locations where some merchants or whatsoever want to promote something, and so therefore I think it's not that bad that the incentives is comparatively high. You can see it here, more than 50%. So that's crazy. The delivery incentives is not going so low actually. It's not going so low. 30 million quarter on quarter, year on year. That's not that great. I think there is more room left. You can see it here. When you compare Q3 to Q3, at the last earnings results, it was roughly 90 million or something like this, and now it's just 30 million. So not that nice. And incentives already increased in the past. It's okay. I mean, it's definitely, it's even more than, I can see it here, roughly 400 million and roughly 380 million compared to last quarter. So even though the revenue increased not on a strong level, the level of incentives increased quite heavily. Still, they reached adjusted profitability, but not that great. And when we could look at the relative numbers, total 7.3, total 7.1, so they increased it, and it's primarily driven by what? Sure. I think it's primarily driven by the food business actually, by the 0.2%, and in connection with a higher GMV. I think that's the reason. Okay, and now I think it's time to face the truth. Give me one more sip out of my bottle. Now I think it's getting serious because actually the outlook is coming. See if you can see my screen. Yes, looks good. Nice. Technology is working. So I think that's the reason why somehow the stock gets hammered, even if it's not heavily. So 660 million for this quarter. Shit. They are just stating the yearly revenue. And let's check out what that's the. Let's go back to Grab, and I just want to check out what was the forecast. I hope it's still available. 2.82. I mean, I'm not sure what is the basis of this forecast, but if now they really go for an outlook, I was on the wrong page. guys, that was not so brilliant. However, okay, but the outlook is not on 2.3 billion. I'm very happy about this, but on the other hand, it's just 14 to 17% year on year. As I mentioned, I expected at least something like 2.8. I personally expected more. Yeah, I expected 30%. I think that's something like 20% year over year. Yeah, so I expect something like 2.9 or 3 billion. I think. So that's definitely below. I will not, very likely not listen to the earnings call. I need to work a little bit after the stream. Then I'm finally done for this week actually. Later on the new call, but that's not work, that's fun. However, so I would be very interested, what is the reason why the outlook is bad? Yeah, and in my perspective it's bad. Yeah, I mean it's somehow, as I mentioned, for me it's a growth company, growth in terms of revenue, but as well growth on profit. Yeah, and they beat the profit side, and it's great. But guys, 14 to 17% is really not that strong. Really not that strong. Yeah, I mean they have a lot of potential to dig more revenue, get more share, getting more efficient, lowering these incentives, stock-based compensation. We will come to the next slide. But yeah, not convincing me too much actually. You see my mood is going down. Maybe as well because we already quite long live. However, then we have group adjusted EBITDA. I think that's as well not that high. Huh? I mean, let's say 190 million in the middle, and what they achieved just this quarter is 35 million. Yeah, let's say maybe next quarter they will go for 50. Yeah, 50. Yeah. Hard for me to evaluate. So I mean, my expectation, my assumption, outlook is the reason for this. I think is now correct because again, the revenue outlook and the adjusted EBITDA outlook is not that great for me. Way more important is the revenue outlook, and actually GMV is for me the driver, yeah, not revenue. And who knows how the GMV will develop? What is the reason for this? I keep a little bit distance to it, but I understand basically, honestly, why the stock is dropping. Yeah, so now it's how much? 5%. Maybe they have good reasons. I mean, this financial bank stuff is going well, and GMV growth of all the, maybe they're sandbagging very heavily. Yeah, I mean, would not be the first time, but okay, financial service was not that great, but was not the last quarter as well. Ads looking good, mobility looking great in terms of GMV, and it looks like delivery business is recovering. Yeah, coming back on track. I mean, 13% compared to. Where is it? To 7%. Yeah. Oh, I will keep the stock. Honestly, this is a stock. If I would sell any stock, if I don't have too much emotions. I mean, I like the companies I'm invested in, and I invest a lot of time as well in these companies, thinking out what is the business case, etc. But if it's not working out well, it's not working out well, and I sell it. It is how it is. You know, it's. At the end, it's a hobby, but it's money, it's business as well, yeah? Even if that's more a gamble investment, but it's an investment. And if it would look worse, I would sell it, yeah? And if I think the next days when I have a little bit of time, I will read the transcript of the earnings call and make some ideas about this, and we'll let you know in the next Insights time what my thoughts are about this. But outlook doesn't look too great, but in general, what I like is the GMV development. GMV, as I mentioned, is way more important, and they're not granting an outlook in terms of GMV, which is understandable. But maybe GMV would look way better, and I I'm still very convinced, actually. I'm very, very convinced. And now we come to the share-based compensation. That's just a very quick look. And here as well, I just want to take a look at the quarter. And we have here share-based compensation. Yeah, and it's getting good down. That's good. That's good. That's good. Look, as you can see here, it was already a lower amount of share-based compensation last quarter by 20 roughly, and now it's as well way lower, 24, and the absolute number is less than 70. That's okay. It's heading into the right direction, and yeah, so I'm not so unsatisfied. I prepared this. Let me share with you quickly this Excel document. So just for completeness reasons, let me check again what was the result here. 653 something. Oh, damn, so many slides. 653, and okay, let me enter this. 653, and here we have a positive one. So the results itself are very good in my opinion. They are on track. There's definitely a risk, in my opinion, really, when we talk about the valuation. Again, it's not a bargain, that somehow they didn't create this kind of impulse what the market was looking for. That this momentum hits, and wow, now are we making the turnaround and everything will go better, and Grab is the C limit at 2.0. I'm not sure if that took place, if there was enough action going on. I mean, if you read between the information, like I try, I think it's positive. The banking business, this digital banking licensed business, they're stating it, they're focusing it, there's a reason for this, it's working out well, really people adopting to it. The food delivery is going well, mobility is going, all of this is going well. I think it's just because of these two numbers in the outlook section, revenue and profit guidance. And I understand the market why, and the transactional, the revenue per, or the GMV per user. That's as well a little bit low, but I don't think that's the case. It's just about outlook, I think, and the market is very strict at the moment, and however, that's not my part of the story. That's not why I invest in Grab, and important is that we have a feeling for it, and I'm feeling very comfortable here, but the rest is not that crucial. And guys, I prepared it actually especially for this call, but I'm so late that I'm not sure if I want. Come on, why not? Who likes to? Let me check if someone is watching. But if there's something outside, I just do this for you, especially for you, colleague. R2 are active. Again, hi guys. You write something. Stock dropping. Rich money. I think you left me a comment today, so I can quickly react to. And two new subscriptions. Man, I love this so much. Man, I mean, I'm not a junkie and whatever. I would love to somehow in the long term, I would earn a little bit money out of this, but that's not the major reason why I'm doing this, even if it's a lot of work, honestly. But of course, it's always keeps me motivated if someone is subscribing or interacting. And let me quickly check the chat, what you have written. And stock dropping down 3% pre-market. Stock dropping is good. Look at their biggest shareholders, SoftBank. Uber also has a holding now down 5%. So Uber is it's the biggest holding of Uber actually. They invested in a bunch of monies, and they have been competitor in I think Malaysia, in Singapore, especially Singapore, and then somehow they make a deal, Uber and Grab, and Uber left the market. Therefore, Uber received, I think, 27.5% of Grab shares or something like this, or market cap shares. And still they have something like, I think, 14% of Grab is owned by is owned by Uber, if that's the case. So for me, it's a great sign. And yes, there are a lot of investors which are still investing, was in the past, like car companies and many big players. But guys, just my opinion. As I mentioned, I try to explain it as good as I can. I don't see it too negative. Yeah. Oh, now we have five viewers. Again, welcome. Very thankful to have you in. Even the stock is dropping, and I only see it's 100. For me, it's 100% affected by these two numbers: the outlook of revenue and profit, and the all the details in between are looking great. It's not a bargain, and of course you need to perform. Yeah, you need to perform. You are not that popular as a company. You don't have a hype. You are in a region with some Taiwan-China risk and whatsoever, and not a lot of companies are that famous across the globe. Maybe at least not in Europe, as far as I know. Grab is not that heavily requested and demanded. Yeah, it's obvious that in this case, in this scenario, the price is decreasing. However, let me quickly add the numbers to this, and we get one more time through all the numbers based on the Excel sheet, and then hopefully all of us are satisfied. So I will start with the GMV of deliveries, and here we go, and it's 22648. Then we have mobility. It's 1474. Again, high focus on GMV, not revenue. Then we have the financials, not that heavy beat, but working in the right direction. And I love this extraordinary potential, as I mentioned. Ad business, very clear profit driver in my perspective. And then we have the total GMV, which is 2983. Is this wait, quarter, not like this. That's too good actually. So we have 4441. So these numbers are fine. Then we go quickly to the MTUs, and this is for me very great. More users, active users, monthly transactional users, not like some dead corps which are somewhere displayed in the stats, you know, but which are not worth any cent basically, or even negative. But these are active transactional users, yeah, and this is for me looking so great. Okay, and now we go into the incentives section. Q4, okay, 26636. There we go. Mobility 88. Then we have the financials, which is 3.8. So here strong degrees took place. Then the ads 21.7. And share-based compensation was 6.6, if I'm not mistaken. Yes. And there we go. That's it. Wait, let me check if... sorry, I don't want to scream into your faces. That was not on purpose. Okay, so now it should look good for you. Yeah, so again, one more time. Doesn't look too bad in my perspective. Yeah, GMV growth, roughly 9%. It's not so huge, and it makes sense that maybe the revenue year-on-year forecast, the outlook is not that great. But what I like is, again, that the delivery business getting reactivated. Mobility is on track and still growing very well. I'm not sure if it was a seasonal weak quarter, but it is how it is. The financials are on a solid level. I expect here more growth for sure in terms of the total payment value. Yeah, this TPV. Honestly, here I see so much potential, and I really want to see that. Look, as I mentioned, ads for me is limited in terms of the overall potential. You can see it here as well. The GMV is not high, and the growth, is existing, but I don't think it will reach this kind of levels. Yeah, but at the moment, for me, both of this business are secondary services and the other ones are the primary services. And I want to see that the financial service is joining the group of the primary services, yeah, of really making money, making strong revenue, participating, adding value to the cake for Grab. This is what I want to see, and it's of course, who knows what kind of potential is existing in the future, but it's a solid business we don't need to be concerned about, I think. And MTU is looking great. GMV per MTU, already mentioned it, for sure not great. Yeah, this is, I don't like to see it, yeah, honestly, but it's okay. Again, as I mentioned, so if you lower the service conditions, some service options whatsoever, Grab Unlimited, if it's affecting it, it's affecting it, makes sense. And I'm still happy that at least they have roughly 4 million more MTUs year on year, yeah, more than 10%, that's great. And as you saw it in the introduction, if you joined, you know that they already are in a strong leading position in all of the countries they're active in. So it's great that they still are earning more users and more users. If it would be stable on a solid base, I would not wonder by myself, yeah, would not be surprised, but that's great to see. And incentives, I mean, we have always the GMV on the income side, and on the outcome expenditure perspective, we have the incentives. And as you can see here, I mean, despite mobility, everything is getting lowered, financial very heavily, deliveries is very competitive, and I think they recognize, okay, customers getting now more loyal, Grab Unlimited, other options, the general offers, less competition, so they can start lowering it, the right development, what I would like to see. Mobility, honestly, I have no clue why. The incentives increasing that heavily. Not sure if more competition is joining. Really don't have any doubt, any clue, not doubt. Quite the opposite. I have no clue why mobility incentives are increasing. I don't like to see this, but I guess there will be a reason, and the management is not deciding this just for fun. Yeah. And financial is great, ads is great. Yeah, again, as I mentioned, they have it's a really high margin business, really high margin business, and therefore they can afford to keep the incentives level quite high. Yeah, and overall, sorry, year on year, mobility is completely sucking and compensating the incentives decreasement of the other three sections. Not that great. Incentives doesn't look good, honestly. Stock-based compensation, I'm very happy about, looks good. Yeah, okay. I think, and the last but not least, last aspect, as always, if you joined other calls, I will now quickly rate this call for me. I mean, this one, even if it was very positive, let's do it like this. Revenue, I give it yellow. Yeah, I color it with the colors of the traffic light to make it very simple. Profit is green for me. Yeah. Oh, wait, let's use another color. And then outlook, even if I stated it here as for a quarter, in my terms, I can't do it differently. I'm very sorry for this, but here we got the revenue outlook with 2.75 billion is just simply not that great for the upcoming year in terms of revenue, and the EPS is neutral or slightly positive, so I rate it as well positive. And yes, so then we go to the other four aspects. Grab Unlimited they didn't state any information to this. I guess, as I mentioned, we need to check out. Oh man, I think someone is coming. Wait, one moment, please, guys. Wait. Hi.
Sie laden nicht?
Nee.
Dann möchte ich mich gerne herstellen.
Ja, warten Sie, ich krieg das hin. Einen Moment bitte.
Bitte?
Ich mach das gleich.
Ja, weil,
Ich wusste auch nicht, dass ich nicht mehr lade, ehrlich gesagt. Aber sind die anderen nicht aktiv oder sind alle geblockt?
in liegt.
Achso, ich hab's nicht mitbekommen. Danke Ihnen, ne? Shit, I need to move. Guys, I need to stop the stream. Guys, yeah. Thank you very much for joining. For me, it's just a yellow, red, let's say yellowish call, and I need to stop the stream, man. That's life. That's how it is. Much love to you guys. See you next time, yeah? And quick disclaimer, was no consultation or something like this, yeah? All the best. Bye-bye.